Yo, 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 what's good, people? It is currently 11 minutes past 10 p.m. UK time, Sunday, the 31st of August, 2025. Welcome to another amazing episode of Technically Speaking, which is a free weekly webinar every single Sunday, 10 p.m. to 11 p.m. UK time, hosted by myself, Fadlan Effendi, aka Ninja T, one of the founders of the Blockchain Sensei ecosystem. You can join this free webinar by clicking the link in the blockchain.sensei Instagram bio. That's where you will find the Zoom link. And you can find replays at youtube.com/blockchain sensei. Tell a friend to tell a friend about our free weekly Sunday webinars. Been hosting this for most of 2025. And the reason why I should turn up live is because when you turn up live, you get extra alpha that is not played on YouTube. Before I get started, I must iterate that nothing in this video is financial advice. I do not intend to be perceived or received as a financial advisor. If you are looking for a financial advisor, contact us and I will refer you to an accredited financial advisor. Please always do your own research. I do not claim to be an expert in any of this. I'm just an interested person who loves the market and has spent years studying. And on Sunday, I like to just share my research with the homies. And also, it's great for myself as a practitioner just to hold myself accountable. And I think it's great to start a community. So anyone who's very knowledgeable about something, I encourage that you give out some kind of free information in the world, because you'll be very, very surprised on where things can lead you, the opportunities it can lead to. Even somebody in this call right now, I won't name him, but he started off as somebody in my webinars as just a student, and then he became a client, and now he's a business partner. So you never know where you can go with all of this. Okay, so first of all, we're gonna go over some macro articles courtesy of Milk Road. So I've got 1, 2, 3. I don't want to have a look at this, the Google chain. We're gonna skip all of this. Okay. So 25th, 26th, 27th, and 28th. All right, let's get it. So, as a lot of you guys know, Jerome Powell, head of the FOMC, recently spoke at was it Jackson Hole, with regards to monetary policy, specifically decision making in the Fed. Okay, you know what? I'm just gonna come off camera. Okay, I'm back. So let's see what Milk Road is saying. So, what to look out for this week? Obviously, this week has happened now. In the macro, Thursday we had Q2 2025 GDP data. We had something called the MI consumer sentiment data that came out on Friday. Basically measuring consumer sentiment, if they're feeling upbeat and ready to spend. This is what we want, upbeat and ready to spend, right? Because that means that there's more happening in the economy, which is reflective of a risk on sentiment in the market. There's something called the PC inflation data, which is basically how much everything costs. So Jerome Powell gave a relatively positive speech at Jackson Hole, leading market analysts to increase their expectations of a September rate cut. So an interest rate cut. Oh, we've got Lewis here. Who's Lewis? Right, cool. So okay, so earnings this week. Focus on Nvidia. It's only the world's largest company by market cap. If Nvidia comes in hot, it's a positive sign for tech as a whole. I think I read something along the lines of Nvidia now have more percentage market share in the S&P 500 than any company ever. Hello, Lewis. Welcome to the webinar. Which Lewis is this? Do I know you? All right. Okay. So I'm not the biggest fan in the world of seasonality performance. Oh my God, they got a typo here. However, historically speaking, September has been a bearish month. Do not be surprised if we eat some dirt in September. I'm extremely confident that we're going to end this year extremely positive. Though I believe there'll be lots of opportunities in September if you're a smart investment trader. Let's skip all of this, skip all of this, skip all of this. Okay. All right. That's that one. So Thomas, I've mentioned Thomas time and time again. Thomas is the greatest person on the internet to follow for macro. Put him on tweet notifications on Twitter, Thomas on Markets. He tweets every few days, and everything that he tweets is extremely high level and absolutely no fluff. Okay, so you know what? We'll go over Thomas's Twitter soon, but let's have a look what Thomas is saying. So deciphering Jerome Powell at the Jackson Hole speech. So asset market surged on Friday with stocks and crypto up big. You go to the charts. Oh no, this watch me. If we go to the charts, there's Bitcoin on Friday. Asset market didn't really surge, did they? Don't always believe what you read. This was Fed Chair Jerome Powell delivered a highly anticipated speech at Jackson Hole. He basically confirmed there's going to be a rate cut in September, which is very, very good because it will increase risk on sentiment. So what happened in simple terms, just to recap, the Fed is currently grappling with inflation that's still well above its 2% target and rising, a labor market that's showing some potential signs of weakness. So Jackson Hole was set to give us some big clues as the Fed's currently thinking. As mentioned last week, the Jackson Hole speech was all about how Powell is weighing the risk associated with perceived weakening labor market, warranting rate cuts. Okay, basically, if they cut interest rates, there'll be a higher, I guess you could say, risk on sentiment, which means there's more money flowing in the economy, which means businesses can make more hires. And in the end, we learned quite a lot. Here are the key lines from Powell. The stability of the unemployment rate and other labor market measures allow us to proceed carefully as we consider changes to our policy stance. With policy in restrictive territory, the baseline outlook and shifting balance of risk may warrant adjusting our policy stance. This is central bank speak for we are very likely to cut rates in September. Powell basically confirmed that the Fed is currently more worried about the labor market than rising inflation. He said the labor market faces increasing downside risks, and he said that the effects of tariffs on consumer prices are now clearly visible, but added that the base case is the effects will be short-lived and that longer-term inflation expectations will remain anchored. JP Morgan Asset Management Company, note to client states, we remain tactically bullish. Powell's speech at Jackson Hole confirms the September Fed cut, which ignited the rally, which also broadened. At this stage, even hotter CPI prints, that's the Consumer Price Index, on September the 11th seems unlikely to derail optimism surrounding accommodative monetary policy. So basically bullish. How do the markets respond? Expected rate cuts can be either bullish or bearish for risk on assets. It depends on the underlying market regime. While there is some potential weakness in the labor market, recession risk currently still remains low, so rate cuts are still generally good news for risk on assets. During the Powell speech, the S&P 500 moved higher, so from 6,400 to 6,490. Okay, we're going to talk about the Russell 200. The Russell 2000. These guys got hella spelling mistakes. Okay, so we're gonna have a look at the Russell 2000 during my analysis, but I did want to go through some articles from the good people at Milk Road. So is launching an L1. This, whatever, whatever, whatever. Um, Google's new layer one blockchain has a similar edge. The chain is called Google Cloud Universal Ledger, GCUL, and it was just name dropped by Rich Widman, head of Web3 strategy at Google, comparing it to Stripe and Circle's layer ones. All right. TLDR, GCUL, aka the Google Cloud Universal Ledger, is a payment-focused chain built for financial sector which runs 24/7. So you could say that about most blockchains, but while the fuss? First, he used the term pub anymore. There's more than 3 billion monthly active cloud users. Now take that compared to Ethereum 17.55 million active users. Okay, that makes sense. That means if just 1% of the Google Cloud users adopted GCUL, it would outpace Ethereum's monthly active addresses by 2x. Okay, a corporate blockchain outcompeting. Here's the thing: crypto is never going to be a one-chain system. How crypto more adoption? Okay, they didn't really tell me too much. All right, last article from Milk Road. We're going to check. Trump has launched an attack on the Fed. Okay, this is really, really important for you guys to understand. Let's look at Trump's full frontal assault on the Fed. So let me make something very, very clear. In the UK, we have, let me get a notepad. In the UK, we have the Bank of England and we've got the government, right? And in the USA, you have the Fed and you have the government. These entities, although we know this is definitely not true, are supposed to run independent of each other. Right now, the big thing in America is the government is run by Donald Trump, he's right wing, and the Fed, or the head, is Jerome Powell, who I would say is more like left wing. So, so there's a clash here, right? Now, Trump is launching, has publicly tweeted that he dislikes Jerome Powell, the head of the Fed. So, this is very bullish for crypto, by the way. Let's look at Trump's full frontal assault on the Fed. This week, President Trump said he was firing Fed Governor Lisa Cook. Trump has been attacking the Fed from a variety of angles over recent months, but this latest move means things are now turning into a full frontal assault on the Federal Reserve. While Lisa Cook might be little known name outside of nerdy central bank circles, her potential firing could have big implications. It could mean that Trump essentially gains full control over Fed monetary policy, including interest rate decisions in the most extreme scenario. This would shatter any perceived independence of the central bank. Let's take a look at what's going on in hopefully simple to easy understand terms. Is Lisa Cook being fired? On Monday, Trump said he was firing Fed Governor Lisa Cook effective immediately. This was achieved through an executive order claiming she can be removed for cause. The alleged cause is a criminal referral accusing Cook of false statements on mortgage documents. It's important to outline how unprecedented this action is. Never in a 111-year history of the Fed has a US president fired a Fed governor. So, write this down. The USA still rules the world in one, guns, force, two, influence, three, capital, right? So basically, US dollars are more than 50% of the liquidity pool of the world. Trump, to me, he's more than a president. He's basically, I'm going to put a quote, the current king of the world in terms of who has the most power. I'm not saying it's right or wrong, okay? There's no ethics class. I'm just here to state how I see the world and how to profit from the current world the way it is. So, God, I sound so evil, but Trump is doing things that no president has ever done, that no human has ever done. He has more power than arguably, arguably one of the most powerful people in human history. Maybe the most powerful person in human history. Nobody really talks about this ever, right? So, never in 111 year history of the Fed has a US president fired a governor. In a statement, Lisa Cook said, President Trump purported to fire me for cause when no cause exists under the law and he has no authority to do so. I will not resign. A lawyer for Cook said Trump's move is flawed and his demands lack any proper process, basis, or legal authority. We will take whatever actions are needed to prevent his attempted illegal action. Guys, the president of the US is a convicted criminal. Convicted by law. He can do what he wants. Currently, Cook is not yet actually fired. The Fed has publicly stated that her status remains unchanged, but the situation is unprecedented and is now tangled in a web of messy legal implications and questions. Speculators on okay, forget speculators. Why is it such a big deal? The ramification of a Cook firing could be massive. Let's first start with the Federal Reserve Board of Governors. The Board of Governors of the Fed, right? The Fed, independent of the US government, allegedly, is made up of 7 members, including the Fed chair, being Jerome Powell. Let me just iterate. Jerome Powell. Let me just get his face. This is him. This is Jerome. Okay. All members hold significant sway at the Fed and they all vote on interest rate decisions. If Cook is removed, Trump will nominate her replacement. Currently, excluding this guy, excluding the Fed chair, Trump has appointed 3 of the 7 governors. He last nominated Stephen Moran, and we went over this article in recent times. In a webinar earlier this month. So if he is able to replace Cook, Trump appointees will become a majority of the Board of Governors. 3 out of 7 are already pro-Trump. What happens when it's 4 out of 7, 5 out of 7, and 6 out of 7? Basically dictatorship at this point. So if he's able to replace Cook, Trump appointees will become a majority of the Board of Governors. This means Trump would essentially gain control of the Board of Governors. If the governor stepped down, Trump would have the chance to nominate a majority of the Board of Governors. So you've got Christopher Waller and Michelle Baumann that are going to be in the Fed till 2030 to 2034. Lisa Cook, appointed by Biden. Look at this. Look who they're appointed by. Fucking Obama and Biden. Well, to be fair, Trump himself nominated Jerome Powell. I think they were more friends back then. But his term ends in May 2026. So this potential government majority doesn't mean Trump appointee would fully control monetary policy. However, let's look at Trump's full frontal assault on the Fed. There's more to this. There's another reason why it's timely Cook firing could have huge implications. This has to do with Federal Reserve District Bank presidents. This is getting really into the weeds of how the Fed works, but I will try my best to explain in simple terms. Governments aren't the only people who vote on interest rate decisions. The FOMC voting board includes 12 members in total. So there's 7 governors right? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7 governors. And out of the 7, one of them is the Fed chair. Right? But there's 12 members in total. There's 7 governors above and the 5 Fed presidents who aren't nominated by the US president. However, during February, in years ending in 1 and 6, so February 2026, the reappointments or new appointments of these Fed presidents take place. And these reappointments must be approved by the Board of Governors, which is a 7. So let's go through a step-by-step process of what could happen. What could happen in the coming months, looking at the crystal ball. Come on, Milk, tell me. Trump manages to force out Cook. He then appoints a new Fed governor replacement, meaning a majority, so 4 out of 7 of the Board of Governors are Trump appointees. If this happens before February, Trump could then theoretically dictate which Fed president his governor appointees should approve, meaning he could essentially choose new Fed presidents. And so Trump could theoretically gain full majority control of the Fed voting board, essentially giving him the ability to directly influence monetary policy decisions. Oh my God, this guy's an oligarch. This guy's playing the highest level chess. This is the most powerful man in human history ever. More powerful than Genghis Khan. Because he didn't run the money printer. This may be why Trump is so adamant to get rid of Cook quickly before February. What could this mean? There is a lot going on here. Things could change or be stalled for a variety of reasons, and it's not totally clear that this Trump total Fed control plan is actually a thing. But let's assume it is, and it happens. What would that mean? Trump has repeatedly called for drastic interest rate cuts, anywhere from 100 basis points to 300 basis points. Interest rates right now are, I think it's 4.25 to 4.5%. 300 basis points would mean interest rates down to 1.25%. That would be a colossal catalyst for a fucking raging bull market, extended super cycle. Up until recently, this drastic rate cut seemed unlikely, but things change. However, gaining full control is why you're going to know fundamentals, man. However, gaining full control, I hope everyone who's watching this live and watching the replay really understands the depth of this information. This is way more important than charts. I literally spend most of my time in macro so I can have a risk on, super risk on, semi risk on, all risk off, or super risk off sentiment. This is literally what I think about all the time, right? I'm going to give you the fucking cheat code, right? I spend most of my time in macro to decide if we're super risk on, cautious 50% risk off on, risk off, or super risk off. This is it. 1 out of 5. Ask yourself every single day, what environment are we in? Are we super risk on, cautious, risk off, or super risk off? 1 out of 5. That's a cheat code right there. Okay, I spend most of my time in macro to understand these things. Yes, we look at technical analysis, but I do that last because it's much more important to deep these concepts. So Trump wants to slash rates because he thinks it will save the government hundreds of billions of dollars in debt interest expense, ease mortgage rates, and fire up the housing markets. Oh my God, don't get me started in the housing market. This is why my top things on TradingView, and feel free to copy me, are SIXRE, RWO, and REITs. These are all real estate indexes in the S&P 500, and they show me extreme, well, not extreme, but large upside potential, right? Whilst the stock market is at all-time highs, people are like, oh, we're topping. Nah, because that real estate money has not come in yet, right? I mean, that's what I think, my financial advice. These two goals hinge on rates across the treasury yield curve falling. Lower treasury yields means less interest expense and lower long. Okay, you don't need to know about that. We don't need to hear about this. It's fine. It's not quite as simple as just slashing interest rates, because if rate cuts aren't warranted, the bond market could revolt. So the bond market is basically these market here, right? The 10-year, the 5-year, and the 2-year yield. And of course, Trump wants these yields to not fall too far, or then there's going to be less American dollars locked up in the system, right? And if you can be the money printer, if you can just give out 10-year yields or 5-year yields and promise other countries, a high interest rate, then it keeps America powerful. So it's more to watch the bond market. Blake Gwynn, head of US rate strategy at RBC Capital, said, "We are only a small handful of further developments away from a complete paradigm shift where the president essentially sets monetary policy. Markets have to start seriously considering the consequences for longer run inflation expectations, future rate volatility, and foreign demand for US assets." Prime Minister, a portfolio manager at JP Morgan, said that if Trump is able to stack the Fed with allies, it could lead to an erosion of Fed independence and a steeper curve as inflation risk should rise. So the potential of Lisa Cook leaving her role as governor, either by being dismissed or potentially resigning, opens the door to some big possibilities for Trump. It would then be entirely feasible for him to gain a full majority on the FOMC voting board by February. Jeez. If he does that, we're super cycling, boys and girls. Maybe a quick 3 to 6 month bear market, but it's going to be a good decade. Stay locked in. But of course, just because somebody is a Trump appointee doesn't mean they will do everything the president tells them to do. So far, investors seem to be taking these developments in stride. Longer-term Treasury yields have edged lower. It's true. Longer-term Treasury yields have edged lower. That drop. So TLDR, right? If you're a country, right, let's say, I don't know, I won't even name a country, but you could lock up, let's say, $10 billion for the American government in USD, and you make 5.2% yield. That was in October 2023. Now you only get 3.66%. So it just increases the sentiment. It's like, why would I lock money in bonds when I can be in the market, right? America wants people to either have their money in their own bonds or in their stock market, or to use their currency. Okay. Okay, that's enough. All right. Let's have a look at Thomas on markets. Thomas on markets. Okay. Financial conditions are still turbo loose and getting looser, according to my financial conditions index. This is his financial conditions index. Okay, let's have a look at his finance. Yeah, I couldn't really read too much from here, but let's compare his financial conditions index to the S&P 500. So when we've basically gone through this green zone here, financial conditions get loose. It has coincided with bullish price action, is basically what he's saying. Here, financial conditions were tightening. This was during the Trump tariff around here. This is compared to the S&P 500. And of course, Bitcoin has a high correlation as well. As I always say, think of crypto as just leverage tech stocks. It's a similar story with the Chicago Fed's National Finance Conditions Index. So we can see here that, okay, 2021. I'm not going to comment on this too much. Someone said time to buy shitcoins. Okay, let's have a look. Let's have a look at this chart here. Oh. The two biggest segments of the systemic world, volume control and CTA, have bought more than 100 billion in recent weeks and are now pretty much fully loaded. CTA position in equity. They may start loading again if we see volume entry and the market begins to correct, but discretionary investors still need to catch up. This by no means an over-exuberant market currently, still not reached above the red line. which is excessive optimism. Okay. He's basically saying there's more upside, um, but be careful of pullbacks. I keep seeing people claim the equity position is stretched, so a big drawdown is coming. This is just not true. Overall equity position is not particularly stretched. Performance chasing has been occurring over the past couple of months, and institutional investors that become way too bearish at the April lows are capitulating back into the market. Retail bought the April lows, but they're still way behind, and position is still not stretched. There's room to grow based on most measures. Every measure I look at is still well below where it was in February this year. Okay. Yeah, he's basically saying there's basically a lot of momentum to go. That's basically what he's saying. Yeah, this is the end of the 2021 bull market. This is the end of 2017 to 2018 bull market. This is the end of the 2013 to 2014 bull market. I see what he's saying. Okay, so we can see the equities are wow. Okay, basically, there's a lot of institutional capital that is not allocated to the market. That's basically what he's saying. Okay. All right. Yeah, that's good. What else I want to read? I did some retweets um on the Blockchain Sensei Twitter. A couple of people to follow. Cross-border capital to always view trends on liquidity. Remember, liquidity is king. It's the number one driver of risk on assets. We've got Axel Adler. He basically does loads of dope crypto insights. I did some retweets of him, but I'm going to get into that. I'm going to go on the timeline. We've got Woonomic. He does some cool things, always talking about crypto. Milk Road Macro, who we just read the articles from. I can't even pronounce these guys. They're called Kobaisi Letter and Alpha Extract underscore. Let me just have a look at the retweets and then we'll go over to some technicals. What did that tweet? This is kind of interesting. Gold is replacing fiat currencies as a reserve currency. Gold's share of global international reserve rose 3% points in Q1 2025 to 24%, the highest in 30 years. So 24% of the world's fiat currency is now backed by gold, the highest it's been in 30 years. This marks the third consecutive annual increase. Meanwhile, the USD dollar share declined 2% points to 42%. I thought over 50% of the world's money supply was in USD. I stand corrected. 42%. The euro share remained roughly unchanged at 15%. Gold is now the world's second largest reserve asset after surpassing the euro in 2024. Let's have a look at this. So red represents the US dollar. Wow, we can see here basically, you see here from like the late 80s to early 90s, this is when America just started dominating and just became so much of the world's reserve currency. I'm super surprised that there is so much French franc. This makes sense why the French are still, they have so much power. This makes sense. Oh, sorry, my bad. No, that's the euro. The French franc is dead now. Okay, this makes sense. And then we've got gold over here, which has been in an uptrend. This is a super dope chart. Yeah, that's interesting. Okay, so we expect PMI, the producer manufacturing index, to rise in the second half of 2025. Three key reasons. Regional Fed manufacturing surveys look strong. Industrial production is climbing. And the GEI is bouncing up. PMI will soon follow. So this is the ISM. Oh, shit. Let me go back. This basically coincides with bull markets. Okay. So this is the global economy index. Look here, how we had the COVID decline. This has been the historical pattern. What do we think's up next? Remember, it's not just a bull market. It's not just a bull market in risk on assets. It's a bull market in global commerce and risk on appetite. That's why I tell people, as well as just investing in crypto, if you want to start a business, now's the time to start a business. Because we're going to go through a global bull run where people are just going to be buying more stuff and more money is going to be thrown around. You must capture this because, the bigger, what do they say? The bigger they are, the harder they fall. So if we go through an extended bull market and money's just flowing and assets are going up and everything's good till 2028, guess what happens after 2029? We go through a recession. You have to be ready. Yeah, look here with the ISM. Okay, look how the ISM spiking. ISM, aka the PMI, the production manufacturing index. Basically, when this spikes up, it's in line with previous bull markets. Look how down we are. We're so early. I know that sounds so cliche these days. One from Willy Woo. After weeks of declining inflows, the BTC network made its first daily print of increasing flows, which is the first sign that Bitcoin structure is bottoming out. He's just talking about this inflow here. I think he means inflow in terms of like on-chain buying, and maybe to do with the ETFs. Okay, so we have recently reached this 39% closer to neutral risk and reward measurement on something called the MVRV. I won't go too much into it, but you can find such indicators on charts.checkonchain.com. And Axel here is a researcher / author at CryptoQuant, not charts.checkonchain.com. But if you want to get into on-chain data, this is the website to get into. Okay, how much you got? One, two, two more tweets and then some TA. So, understanding global liquidity cycles and their implications of Bitcoin. Global liquidity remains the single most important. I bang on about this so much. I'm surprised I didn't go to this website. tlx.bgsolutions.net. Number one website to, I think it's the new website here. Number one website to look at the liquidity in the Fed. Not the global liquidity, but the Fed, which is good enough. And we can see here that we're not even at the heights of where we were in April. There was more liquidity in the system in April than there is now. When this swings back up, with interest rates being cut and retail euphoria, we're going to go so high so quickly. You're going to blink. Global liquidity remains the single most important macro driver across all financial markets. Expansion in liquidity typically channel capital into risk assets such as equities, bonds, and cryptos, while contraction tends to suppress performance. So less liquidity in the system, price goes down. Similar to other cyclical market forces, global liquidity moves in identifiable waves based on our global liquidity index and analysis, which aligns with the research from cross-border capital. So that's a nice compliment. Global liquidity historically exhibits cyclical behavior with an average periodicity periodicity of approximately 65 months. The most recent upcycle can be traced back to, I think this is Q2 2022. Is that what they meant? The second half. Second half, so more like Q3, Q4. The second half of 2022, when the UK gilt crisis forced the Bank of England to intervene. While this did not spark a full pivot, it marked the first clear sign that central banks would reintroduce liquidity backstops when markets broke. The true turning point that set the stage of the broader global liquidity upswing, which accelerated in 2023 with the SVB crisis. I think this was the bank, right? Prompting emergency Fed liquidity provisions, followed by the Treasury shift towards massive bill issuance. According to this framework, this cycle is projected to extend into early 2026. This is why I think the cycle top will be around March to May 2026, at which point liquidity conditions are expected to peak. Implications for Bitcoin and digital assets. If the cycle unfolds as expected, global liquidity will continue to trend higher until early 2026. I'll bet with potential interim periods of consolidation or pullbacks. Such an environment is generally supportive for risk assets, particularly cryptocurrencies, which have historically demonstrated strong sensitivity to shifts in liquidity. Okay, so this is the global liquidity index. And this is, I guess you could say, the average trend of the cycle. Okay. This model brings us to around March to May 2026. And this has been the model since 1994. Yeah. And the super cycle theory is basically that we top out in March, May 2026, and then have a short bear market of, let's say, 6 months. Because in May 2026, like, I wouldn't be surprised if in May 2026 we were in peak euphoria. Trump appoints a pro-Trump, pro-crypto person to be the head chair of the Fed, and then it's basically sell the news event but short bear market, followed by super cycle. I'm straight closer to this every single day, but I don't want to call things too early. But hopefully it's true, and I can say I told you so. Yes, Toby, appreciate you. All right, okay, let's have a look at some TA. Let's have a look at some TA. Okay. Right. The global stock market is at all-time highs. Now, I know people can have a lot of fear on these highs. If you're a smart investor, you can be thinking, oh shit, it's too high. How high can we go? Well, the stock market is at all-time highs. The NASDAQ is at all-time highs. We just set a slight higher low. I mean lower high. My bad. From the mid-August high to late. So we're technically closing in a slight downtrend in the NASDAQ, but that's okay because we know capital can flow from one market to the other. S&P 500 closing slightly lower than we were yesterday, but overall S&P 500 up, I think 9% for the year. However, there is something that's very interesting, and the very interesting thing is something called the, where are we? The Russell 2000. So think altcoins, but alt stocks. What is a Russell 2000? In fact, let me show you guys how cool Grok is. Let's see if you don't know something. Explain to me what the Russell 2000 is and why it's important for crypto investors, crypto/risk on asset investors to know and understand. So think altcoins, but alt stocks, right? So these are Fibonacci retracements. Okay. We have recently broken a very key level on the Russell 2000, and that key level is the 0.786 on the Fibonacci. You can see here that in mid-August, we went above, below, and then we've closed clearly. We've ended the month strongly above the 0.786. Now, let's study history. Okay, 1 second. Let's read this for a second. The Russell 2000 index is a stock market benchmark that tracks the performance of approximately 2,000 of the smallest public traded companies in the US. So not the biggest, the smallest. When this is rising, this is a sign that we are entering a risk on or going from risk on to super risk on. Right now, I believe we're in a risk on environment and we are peaking towards a super risk on environment because this is not the S&P 500, right? Let me compare them. The S&P 500, the most famous of all investments, is soaring at these highs, where the Russell 2000 is still below its high in late 2021. Okay, we're still below it. Now, the Russell 2000 breaking highs has typically signaled the beginning of euphoria. Let's go back to previous bull markets. Let's go to like 2013. Okay. Well, want to do 4 cycles. Want to look at the past few cycles. So we can see here that pretty much at the start of 2013, the Russell touched or broke its highs, right, from previous years. And then from 2013 all the way to the end of 2014, we had this huge run in the Russell. That coincided historically with, let's say S&P 500, let's go to like 2013 up. Oh, let me get this. In 2013 all the way to 2014, we had a huge run. Okay. And then Bitcoin had a huge run as well. I forget what the exact numbers were. And then what else do we have? Okay, so and then 2017. Okay. So let's go to January 2017. When did the Russell break the high? Basically January 2017. It broke the high. And then this is when Bitcoin went on the huge run in 2017 to 2018. This is when Bitcoin had the like crazy run, right? It went to like 20K. I think it started the year at like 1K or some shit like that. Now, in the previous cycle before that, okay, obviously this was the COVID dip. It took the Russell till end of 2020, like literally December 2020. It broke the previous high, and then this was the whole bull market of 2021. What needs to happen is that the Russell needs to break this, and that is when the meme coins and all the alt stocks, you know what I mean, like these crazy stocks in the stock market that have $25 million invested in right now, but they're going to go to $1 billion and 40x. It's going to happen as or when we break the Russell 2000, which again is, of course, the 2000 smallest equity. So not biggest stocks, but smallest stocks in America. So we are literally at the cusp of euphoria now. I want to go to Google Trends for a second because there's something that one of my professors, it's called Professor Adam, he taught I'll show you guys something. Right, let's have a look at the Google search term for AI or Google Trends. So we're going to go to worldwide. I'm going to go to the past 5 years, or not past 5 years, we'll do like past 12 months. Look at this. That's absolutely abysmal. Let's, in fact, let's go back to the past 90 days. Yeah, the global search term for AI is the lowest it's been since May. Like, think about how much has happened in the world of AI and how much the world's moved forward. But this is just showing me that in the past 90 days, people are less interested in AI, right? Which is, it just shows that you can have an edge. And then let's search for the word crypto. In fact, I'll take AI out. Yeah. So yeah. Oh my God. Oh, people are so lame. Right. So you can basically see if I compare this, if I actually compare the word crypto to the word Bitcoin, I bet you that the global search terminology is basically in line with the price going up and down. People are lame. So it's really funny, right? So look, I say all of this to say that you need to stay interested, especially when the world doesn't care. That's where the moves happen, right? So uh, let me just go to the 26th of July. Okay, 26th of July. Okay, 26th of July. I suppose there's like a delayed response. Oh, okay, I get it. So basically, what happens in the world is price goes up, and then after price goes up, a few days later, people are interested. And then the peak of the interest was the 14th of August. Yeah, that's literally the all-time high of Bitcoin. And then people are most interested on this day. And then the price of Bitcoin falls, and then the interest falls. Look at this. This is fucking disgusting. How can we go from 100 interest down to 23 in 6 days just because of the price of Bitcoin went from 124,000 to 110,000? If this doesn't show that you have an edge, okay, we've got invest. Let's just looking for the word investing. Okay, it's the lowest it's been in the past 90 days, like the past 12 months. Oh God, people are so lame. 60. Yeah, we about to reset. Yeah, the market's gonna go ballistic. There's so many signs. Okay. Uh, should I do some more analysis? One more analysis. Guys, you've been very patient. Rylan or Lewis, have you guys got any questions? Or Rylan, are you in on thingy? Are you in on two devices?
No, I'm on one of us.
Oh, okay.
Yeah, can you hear me?
Yeah. What's good?
Yeah, we called last on Friday. Yeah, thank you for your session. Really insightful.
No problem. Oh my God, it's Lewis from Solana.
It is the
Yes,
that one.
yes. Thank you for being so patient. Okay, I'm gonna go over some more charts, but since you've been so patient in the background, do you have any questions or anything you'd like for me to look at? I'll give my opinion on.
No, no. Yeah, keep doing what you're doing.
Okay, no problem. Rylan, any requests from you before I start diving back into some charts?
There was yeah, there was just one stock I wanted you to look at. Um, let me just double
Is it
check.
this one? This sound AI thing?
No, it's another one. It's just because one sec, let me just have a look. Quickly get it up.
No worries.
So it's SEZL.
SEZL.
Yeah,
Sezzle.
yeah.
Okay. Okay. It's a sharp decline. Is it a bargain? Is it not? Right. So let me tell you the first thing I do with stocks because you can't do this with crypto.
Okay.
So in a sense, this gives stocks one edge. Go to TradingView, grab this and scroll up and then look at earnings. Yeah. What you want to see is that you want to see four greens. The black is the estimated and the green is how much they earned. So we can see that this company has been profitable for 4 quarters. Yeah. Then the next thing I'm going to do is I'm just going to quickly ask Grok. I'm currently looking at the stock Sezzle. Is it Sezzle? Sezzle. Yeah. Sezzle. I can see it's been profitable with 4 positive quarters on the fundamentals. However, there's been a recent huge drop. Okay. I'm going to do. By the way, everyone should be using Grok. You can use the Grok Expert, and you get X amount of free questions a day. However, there's been a huge drop in price. What was the catalyst? Is this a buy the dip opportunity or catching a falling knife? Catching a falling knife basically means that you're buying something low, praying it's going to go up, but it's actually just continues to go down. So this is a good start, right? What I don't like is this big fat red candle. Like, where did this come from, right? So basically, if you're in this stock on Friday the 8th of August, you would wake up on Monday in 36% drawdown. So why did this happen? Right? We need to know. Second of all, it's obviously set. Like, this is an insane run, right? This is an insane run. Are we going to go lower? I'll tell you straight. I think there is a possibility we could go down to this price. Why? Because can you see the gaps?
Oh yeah,
See the
yeah.
gaps, right? Yeah. Do you remember what I taught you about gaps?
No, I can't remember what you mentioned about gaps.
Okay, maybe I didn't teach you. Lewis, do you know about gaps and why they're important to
No,
look at?
not
Okay,
not explicitly.
so the reason why gaps are important to look at, and this is why you should look at things on both the shorter and higher time frames. If I was on the weekly, I can't see the gaps. If I'm on the monthly, I can't see the gaps, right? If I'm on a 2 week, I can't see the gaps, but if I break down to the daily, I can see the gaps. Now, gaps typically get filled almost for sure. So, is this stock going to bounce up and snap into this gap, or is it going to bounce down and snap into this gap, right? I don't know yet. So let's have a look. The significant drop in Sezzle stock price occurred primarily following the release of its Q2 2025 earnings on the 7th of August 2025. But wasn't the earnings good? Well, it was good. Despite beating Wall Street's expectations on key metrics, yeah, that's what it said. Revenue of 98.7 million, 76% year on year, exceeding estimates by 3.9%. Okay. Why? Why did it do that? Why did it do that? Q2 revenue was down quarter over quarter, which raised concerns about slowing momentum in buy now, pay later sector amid broader consumer spending caution. Oh, they're a buy now, pay later. They're a Klarna kind of company.
Yeah, yeah, yeah. It's a Klarna
They're a
type thing.
Klarna. Okay, they're a Klarna type company. Okay.
Because the reason why I was looking into like those avenues, because I remember you saying like debt was one of the biggest things and stuff like that.
Yes. Debt is the biggest market in the world. However, these companies there's a lot of competition basically. Like you you got to think you got to think what's the competition saying? Unchanged on soft guidance. Cecil reaffirmed its full guys. Everyone watching this and including Lewis, it doesn't matter that I'm looking at a stock that you're not interested in. Okay, look how I am look. I'm showing you live how I'm looking how I look at stuff. Trading View gives you a lot of information already. And Grok is an absolute fucking godsend. No. Go back here. Okay, so while revenue soared, net income slightly declined, and the stock's PE ratio, 41.6, was seen as an elevated compared to peers like Affirm, Profit Taker. Okay, so what is PE ratio? This is price to earnings. And basically, we have to understand that everything in the stock market is hyper overvaluated. 41.6 basically means that there's 41 times more money in this stock than its actual earnings. So this is a very, very high PE ratio. The drop coincided with volatility in small cap and fintech stocks, including similar post-earning reactions to its peers like TTD and Affirm. So, Ryland, have you had a look at their competitors? Always look at a stock's competitors.
Okay.
That is some homework. Before you invest in anything, know what the competitors are, because you can hold on to an individual narrative, but if there's like three other companies with doing the same stuff, then you shouldn't over risk on one stock. Is this a buy the dip opportunity or catching a falling knife? Cecil has shown strong fundamentals with 4 consecutive profitable quarters. That's what I said. Driven by innovations like on-demand payments and a 74.2% surge in gross merchandise volume. That's a lot. However, assessing whether the current 50% pullback from July 2025 is a dip to buy or risk falling knife, this is a huge drop. Like, that's 50 fucking percent, dog. Oh, also, I'm gonna show you guys something live, right? There's a tool called the Fibonacci retracement. You click on the high, and then you drag it down to the low. Now you could argue the low is here, but I would argue that this low is invalidated because this is a time period that, to me, that's not even that far away. It's August 2024. I would say this is the low personally, as I like to go off the springboard of momentum. Remember, technical analysis is both a science and an art at the same time, because a lot of times it's just male astrology doing finger paintings, right? Don't let this fool you. But we can see here that price has hit the 0.382, which is known as the golden zone. In crypto usually draws down when it comes to altcoins and meme coins to 0.236, which is the red fib. But stocks, more likely than not, pull back after a crazy run to the yellow. So if we maintain this price, and if I zoom in the smaller time frames, I can see that we're bouncing off high from here. So put a gun to my head, God forbid, I'd say that the likelihood is upside rather than downside from what I can see. Okay, so they've got solid fundamentals. Q2 results underscored resilience with 76% year-on-year revenue growth, best-in-class margins, 38% and profitability, unique amongst the other buy now, pay later peers. The company is expanding customer acquisitions aggressively with free cash flow challenges viewed as temporary due to low provisions for growth. Zach estimates 2025. Forget this. Wall Street remains bullish with a consensus price target of 134. 134 being right here, which is basically the resistance at a 0.618. Okay, that makes sense. All right then. Buy now, pay later demand could rebound with expected Fed rate cuts. Yes, that is correct. With the Feds cutting rates in September 2025 in the next FOMC meeting, you are right. You're right, Grok. This makes sense. The buy now, pay later demand could rebound, so in line with macro. Tesla's focus on underserved markets and participants, e.g., card issuance. I don't know what this means. Position it well. X sentiment includes calls to accumulate on dips with comparisons to past surges. 620%. Yes, that is a lot of price action in Q1. That's fucking insane. I can't lie. This is a crazy move. Yeah, shit, you could be on to runner here. Okay, this PE ratio kind of scary, but in euphoria, it really doesn't matter. Small cap fintechs like Sezzle are prone to sharp swings, e.g., 9% drop during past inflation shocks, or 50% from all-time high in 55 weeks. X post warn a further downside to retest prior peak $64 post split. So $64 would bring us to the red fib, which is right here. See, this is why you're going to learn to do technical analysis and read as well. So you can kind of skip between words and looking at charts. This leans more towards a buy the dip opportunity for long-term investors who believe this has a profitable growth. Yeah, there you go. You like that analysis, Ryland?
Yeah, it's helped because I knew that
Yeah.
obviously I don't fully understand all the technical analysis stuff. So obviously, once I get more comfortable with that, I should hopefully be able to make a lot more decisions for myself.
Yeah. But no, notice how, you know, through a bit of research in AI, oh my God, look, the technicals line up beautifully. All right, so what the technical saying, the RSI on the daily, the purple is just breaking out the yellow. This is a sign of bullish momentum. On the MACD, we've got the 12 blue crossing over the orange. This is a sign of bullish momentum. We can see green bars forming here. This is a sign of bullish momentum. We can see the purple, the orange is closing in the blue on the daily. On the 6 hours, it's about to cross. On the 4 hours, we've just crossed. Yeah, I would not financial advice. Buy Sezzle. Good find. Good find, my friend. Good find. This is why you should come live, guys, because you get this analysis. All right. Top picks. I believe Doge has one of the best risk to reward ratios at today's price. It's definitely Doge season soon. This is just it's just been lagging in my opinion. Solana. Everything's good. We're taking high highs, high lows. I think we are well on our way back to I am almost 100% certain that we're going to close this year in Solana way above 300. I don't want to say the exact number, but I believe Solana is going to close way over 300 at the end of this year. I don't want to put a price target, but we are in everything to do with technicals, seasonality, institutions, ultra bullish on Sol. Ethereum, we are still testing these highs. I would not be surprised if we test 4,000 again with Ethereum. As you can see, this is a temporary downtrend on Ethereum. So if you are looking to accumulate Ethereum, around 4,062 is the sniper price, and the next entry after that is 3,863, but I doubt we're going to go there. As I've said in previous webinars, what you want to be doing is you want to be comparing assets against each other. So, you know, you might be asking yourself, do I go for Solana? Do I go for Ethereum? You type in something like, you basically type in the asset that you want and then USD, Sol USD, ETH USD. We can see here that it seems that we've reached some kind of support in the Sol ETH ratio. And I don't want to call it right now, but there is a possibility that this has bottomed out. We can see here bearish exhaustion on the MACD on the 8-day. I'll bring it to the weekly. We can see here almost a breakout on the RSI. This is the price of Solana in Ethereum. as this goes down, this means that Ethereum is outperforming Solana because it costs less and less Ethereum to buy Sol. When this goes up, this means that Solana is outperforming Ethereum, which makes sense because ETH has been soaring, and eventually the ratio is going to switch, right? Let's say ETH rips to 5K. After ETH rips to 5K and Sol sitting on, I don't know, 210 or something like that, it's going to be really hard for ETH to get to 10K before Sol gets to 400. Does that make sense? So I say this all to say, do ratio analysis on your cryptos. And then you will not be subject to always living on analysis by USD. Okay, I'll do one more pick. I'm currently sharply looking at the Pengu ETH ratio. Basically, I think that we might go down to here. And if we go down to this zone here, this is basically the free ETH money zone where I'm just going to convert ETH. Like, here's a trade idea, right? Not financial advice. You can get this chart yourself. You just literally type in Pengu USD / ETH USD. You can take this swing trade idea for yourself if you want to do asset swaps. This, to me, here is the free ETH money zone. So, I'm not saying I will, but let's say imagine you put in 1 ETH when Pengu's at this price, assuming that the narrative of Pengu and the Igloo ecosystem continues, you can basically flip, for example, 1 ETH to 2 ETH quite easily in this swing. Okay, it is midnight and I am absolutely exhausted. However, I will happily take 1 or 2 questions from the homies if they've got any. Lewis, this is your first session. Thank you for attending. How have you found it? And any questions?
Yeah, thank you for having me. Yeah, it's really interesting. Yeah, I mean, I'm like I say, fairly boring with my investing. It's mostly index funds and stuff like that, and some crypto here and there. And yeah, so I don't have any like specific questions, I guess. But yeah, thank you for the session. I'll be attending in future hopefully as well. But yeah, thank you.
100%. Well, I'll see you on Friday at Solana.
Yes, yeah, I look forward to it.
Yeah, amazing. All right, Rylan. We've got a session on Wednesday, 6 p.m. So I'll speak to you then.
Yeah, definitely, man.
All right, take care, homies. Appreciate you.
All right. Okay, see you guys.
Cool. Cheers.
Bye bye.
Thanks.